So, ladies and gentlemen, dear friends of BRS, the Belgian Raiffeisen Foundation, I wish you all a warm welcome to this 9th edition of the Microfinance Lunch Break.
Well, today we have our 9th Microfinance Lunch Break, so it's already becoming a tradition. And the aim of the Microfinance Lunch Breaks is to get people involved in the challenging world of microfinance and microinsurance, and we try and alternate both subjects from time to time. And today is really has been a big issue because we have more than 180 people present. It's the first time that we reach that kind of people, so we are very happy.
I now give the floor to Kurt Moors, our program director at BRS, who will moderate the debate.
Today it's a question, is it abusive, microfinance interest rates necessary, or something else? Then you can see that organizations are not becoming.
Who benefits from the microfinance activity? Is it the shareholders of this institution? Is it the staff? Is it the clients of the institution that get better off? In terms of interest rate, I guess, they've been historically decreasing, probably a little bit less the last years. Since 2005, they decreased between 2005 to 2007 and less since we have a financial crisis. But I guess it will decrease, I hope, because of technology also, if not because of the pressure of the different regulators, stakeholders also. I guess it's extremely important for the sector to be sustainable, and sustainability will maybe go through lower interest rate, otherwise it will not be socially acceptable anymore.
There is a movement who is prioritizing the outreach and the quality of the service and leave the sustainability thing after that. And there is another movement which is prioritizing sustainability of microfinance, and then when the institution is becoming more solid, it will be able also to reach out much more in depth. So the debate will always be open, but I think that compared to a few years ago, today we have more tools for analysis.
What do you think about the model of these highly profitable consumer loans in an organization in order to cross-subsidize for the less profitable agricultural loans? Is that the future? We have a lot of points raised. I guess the conclusion was that, on the one hand, these high interest rates were needed to start microfinance operations. I mean, it was extremely difficult to start institutions, to make them sustainable, because we know that historically the credit programs extremely subsidized were not always sustainable, meaning that after 5 years of operation, for instance, the program stopped and then nothing remains. So these high interest rates were useful in the first phase. But on the other hand, we know that interest rates are increasingly scrutinized, let's say, by different stakeholders, and that probably will need to work on them even more. I mean, it must become a priority for the sector also to work them, to make them transparent, and really try to do everything possible to decrease them.
I think the cooperative solution is an important element in the debate, because we see that cost of funding, cost of capital is an important issue in the total cost price of a microfinance loan. And to the extent that cooperative institutions can also capture local savings, they may have lower capital costs, and therefore this can be passed on to the customers, to the clients.
Well, the thing I take with me from a debate like this one is that, above all, it's the spirit of the people who are involved that will determine whether the poor are benefited. If the spirit of the people is commercial, then the clients are not at the center of it.
An hour is not enough to delve deeper into it. But the quality was great, the format was very, very interesting, and the speakers were approachable, very approachable, and the moderator did a great job. So all in all, a great experience.
Honestly, I missed one issue, one topic. The whole seminar was based on a kind of top-down approach. We were staring at the institutions and the reason why they charge high interest rates. But I missed a little bit of bottom-up approach. What can loan takers do in terms of putting pressure on the institutions to lower their interest rates?
Overall, I thought it was a very interesting discussion. I'm glad issues came out, such as more transparency getting clients more choices. I think if competition isn't doing it, at least making more choices available for clients is important. And in the end, this is a market. So I think it's important to think about ways in which investors, donors, and other stakeholders in this industry can really help the market develop, not interfere, not distort, and not put caps on prices.
But there was an interesting questions, and I still don't have the answer because nobody had the time to answer it, which was about the cost of the refinancing. When an IMF is coming to a fund in Europe, in Brussels, in Luxembourg, to look for finance, how much does it cost? And what can we do as bankers, as fund managers, to reduce this cost? I still don't have the answer, but we're working on it.
Well, the end conclusion was that today we got a challenging discussion, a challenging debate on an issue that is not that easy. So it seems to be easy to ask the question, is it abuse, is it necessity? But in the end, it's more complex, and I think we got a lot of thoughts to take home and to address because we saw different opinions. Having a cap, is it necessary, is it not necessary? On the other hand, there were also questions about donor funding, the role of the public funding. So it was a very interesting event today.